Aura Property Group, guiding you home.
At which rate is capital gains tax calculated?
Well, Jarette, the answer to that will really depend on the capacity in which the property is owned, as the inclusion rates for capital gains tax purposes differs from whether a property is owned in a person's individual name or whether it's owned in a company, CC, or trust. For individuals, for example, the inclusion rate is 40%, which means that only 40% of the capital gain will be included in a person's taxable income for the year. And that is then taxed at the income tax rate applicable to that individual. Now, say for instance, a person pays tax in the highest tax bracket, which will then be at the statutory rate of 41%. That would make the maximum effective rate at which capital gains tax is calculated 16.4%, for example. For companies and CCs, 80% of the capital gain is included in the taxable income, and that is then taxed at the statutory rate of 28%, which makes the effective rate of capital gains tax 22.4%. For trusts, on the other hand, again, 80% of the gain is included in the taxable income in the tax year, and that is then taxed at the statutory rate of 41%, which makes the effective tax rate that of 32.8%. So you can see that there is quite a difference in the calculation, and it really depends on how and in which capacity the property is owned. It's not really, however, a question that one can just answer off the cuff, and any person that has questions with regards to the rate or how much capital gains tax is payable on a transaction would be better advised to actually seek the advice of a tax practitioner or consultant.
Aura Property Group, guiding you home.